Fractional NFTs, a very new term for the market, seems to be having a lot of potential based on the hype they have been receiving these days. A lot of reports coming from Bloomberg have revealed that the Securities and Exchange Commission, others called the SEC, is now investigating the NFTs. However, they have something very peculiar to find out through this investigation. Let's find out what spooked them this time. Will it be as useless as their allegations against Ripple's XRP, or will it be anything fruitful this time? Only time will tell. First things first, we need to find out which asset class these NFTs would fall in. This will then be followed by the eradication of any of the false operations that could bring in a lot of information on the current events in and around this technology. So, what are these issues that need to be found? What led to these queries? And why is the SEC so interested? Hit the like button, subscribe to the channel, and let us know in the comment section about the views you have. Gary Gensler, you must have heard of him quite a lot after the entire Ripple versus SEC tussle. He's not one among those people who would like to give up on any of his discoveries. We know this through the events that have occurred in the past. Now, the next target he has set out for himself is the NFTs. The question for him is, are they what the investors call them out to be? Is there anything fishy in the fractional NFTs? And for you to get a good background on it, what are these fractional NFTs and are they legal? The questions are just endless. But don't worry, the answers are very limited and brief. So the next few minutes will be full of juicy nectar, which ardent followers of this field will call exemplary knowledge. So getting back to Gary, he has not been in favor of the entire system of cryptocurrencies. His view has showcased his reservations about allowing this technology to flow out and letting it grow at the pace it has been in the past few years. What is worse is his selective opinion on a few major ones like Bitcoin and his detrimental views on the rest of them in the market. While many of them call him out for not having a rational nexus for the allegations he has been making, the story he has to say has been very different. While the government and the SEC are due to determining the kind of assets cryptocurrencies are, a totally new concept is hitting the market, which now requires a lot of attention. As the NFTs started taking up the pace, just the way they tried to hold down cryptocurrencies, the SEC, under the leadership of Gary Gensler, decided to audit the NFTs this time. As tokens started getting sold for millions of dollars, the government quickly realized that this is going a long way in the future and that people are closely observing the progress this region has been making. Therefore, this growth is the primary reason for extensive regulations and more vigilance in this field. It is now time for them to intervene in an already existing market that has been running well, increase its volatility, and make things really unstable, just like the pull down the entire market value of XRP. Let's not get carried away with things in the past. What are the new occurrences these days, and what are fractional NFTs? Why are we talking about it in this video? Is it worth the entire hassle? A short answer to the question of whether it is worth it will be a yes. However, there are a lot of other things to consider. Let us start with what these are. Now, fractional NFTs are the portions of the same asset. That's about it. These are the broken down units of the same assets that could this way be owned by multiple people. Owning a part of it makes the wonders part owners of these assets. Even though we have not seen any regulatory penalizations for trading the fractional NFTs, it is about time that we hear more from the government soon, as they have already started investigating this technology. As we mentioned earlier, SEC will not back out unless they find a small inconsistency and take the entire market down to ashes. To give you an example, it was not long ago that the SEC imposed a total penalty of $100 million on BlockFi. They were charged for not following the regulations prescribed by the government. Even though things have been heated up for so long, if you look at the bright side of things, you will find that the NFT market has not been hit seriously because of these investigations. It has not taken a serious toll that could bring down the value of the entire market. A lot of these tokens have not received a legal NOC from the government for them to continue. This is why the government is concerned about the kind of progress these unrecognized NFTs are making in the market. Looking from their point of view, you will see that the intention they say they have is to ensure that the market is not being blacked. In other words, they work on ensuring that the market is not in a situation that could lead them to the point that could destabilize the individuals investing in it and cause financial distress to any one of them. Though this sounds really good, the manner in which they approach this noble cause is pretty questionable. If you look at the total numbers just from the last month, you will see that the amount from the sale of these unique tokens was a whopping $3.5 billion. A month before that, we were close to $5 billion. The scary part is that a cyber attack could claim all of this as things develop. This means that millions or billions of dollars could then be stolen in just seconds. This is what the government is looking out for. One example of this happenings is when OpenSea listing exploit. The amount for which the NFT marketplace was sued was $1 million. This is where we think that SEC may come in. With such a huge quantum in the court, the SEC will certainly initiate an investigation, or if not, the court may itself direct the SEC to find out the root of all causes here. This is where SEC will come in with its own agendas, which may end up destabilizing the entire system. This gets more interesting as we learn more and more about it, isn't it? Let us make it a bit better by learning more about fractionalized NFTs. The investors call this a new opportunity to make fruitful investments. The constraints like high prices, less liquidity, and non-interchangeability have been the ones that were getting in the way of NFTs. You already know that no two NFTs are the same. One NFT will always have a different value and other imperatives totally different from the other one. The main aim of NFTs is to provide authenticity and ownership of real-world assets in a blockchain network. Non-fungible is a term used to describe items that cannot be interchanged with other items due to their unique properties. Digital artwork, real estate, event tickets, and other non-fungible assets are examples. Dollars, on the other hand, are fungible. A $1 bill can easily be exchanged for another $1 bill, which is why many people feel that the dollar may be a better medium to make exchanges. This is also what gave rise to our previous conclusion that no NFTs will ever be the same in value proposition or their physical appearance. So, what causes such complexity in the case of fractional NFTs? The answer is pretty simple. Since their inception, NFTs have had a few important characteristics. These are that NFTs are indestructible, can guarantee absolute ownership, and are interoperable, which means that they can be traded, purchased, or sold, verifiable, and last but most importantly, indivisible. This is one characteristic that instigates the minds of the SEC. Generally, an NFT has a single owner. As we mentioned earlier, you will be the only owner of that particular asset in the world. This gives you exclusive privileges over the said NFT. So, this entire concept of fractionalized NFTs has totally eradicated the entire essence of NFTs by allowing more than one individual to be the owner of a part of a single NFT. This led to the market for this kind of NFTs going really crazy. A lot of people started to invest in it, and they started making a very good profit out of it. The opportunity that this came up with was that the people who are getting into this area were the ones who were not able to invest such huge sums in a few assets. They were now getting an opportunity to invest in the high-value assets in small portions of it. There were a lot of other benefits coming out of this kind of market. The first one was that the fractionalized NFTs get a better price discovery through this method. You also will be able to make a better analysis of the market and hence make better decisions with time. In simpler words, all you need to do is to fractionalize these NFTs and sell 10 to 20% of them in the market. This is followed by higher liquidity offered by this kind of asset. When selling a high-priced NFT, you will have to wait a while because only a few investors can afford such an asset. FNFTs, on the other hand, allows you to split the ERC721 token into multiple ERC20 tokens and sell each one separately. Next up is a very significant advantage. This is where the people get represented in a higher proportion. A lot of people, as we mentioned earlier, are getting into this game as they are now getting an opportunity to make investments in a few of the high-value NFTs. As they can now purchase a small part of it and gradually come up with more of it with time, they get to make better use of their investment and make better deals. The small and medium investors will now get to make a better trade and make their investments more diverse. This means that it will call more people into the community who would love to leverage their profits through this system. The next big advantage here is the curator fee. The original NFT owner who divides the NFT into various parts will be able to receive the fee annually. This means that the curator fee can be set and can also be updated by the NFT owner. This is cost capped, and the maximum cap is set in most cases to make sure no exuberant fees are being charged. So, as an advantage, through this advantage, the owner will get to monetize things really easily. Fractionalized NFTs will make things easier for them to work with and make their profits in a better manner. But if fractionalized NFTs, abbreviated as FNFTs, are so advantageous, what is the problem according to the SEC? Well, the problem that the SEC is having is quite unpredictable. But from what we can foresee, there are a few issues that this could bring into the market. First of all, the entire idea of breaking down an NFT into various parts as lower costs means that there will be a lot of competition in the number of people trying to buy the asset. This will mean that people will have to be swift with their actions because assets could get sold off as soon as they are released. Secondly, the gaming industry will see some rough times. The reason for that is that trading the game cards used to be a massive market in itself. If you were to know of an example, we would definitely recommend you to go check out the Pokemon cards. The prices for which these cards are sold are just humongous. Furthermore, there are a lot of gamers who sell these cards in games. This could be in the form of skins, rare items, and many other possibilities. The introduction of the FNFTs could mean the end of this market. This will then have an effect on the collectible market and will certainly make things harder for those who are making good leverage out of it. Collectibles like the CryptoKitties are being sold for prices more than $1 million. On the other hand, a collectible of CryptoPunks, 50 in numbers, was fractionalized and put on sale. This further dilutes the market and makes the entire concept less auspicious. If you look into the real assets, you will see that the fractionalized NFTs have a huge role to play in them. People will now be able to own luxury property that was not possible for them to own before this concept was introduced. As the luxury properties are fractionalized into various other properties, investors will be able to make their investments in small pieces and later expand them gradually as they get into it. It will eliminate the need for them to enter into mortgages, and even the need to buy properties as tenants will hold a part of it for themselves. So, what are we looking at in future for this kind of asset? How far will it be able to develop? These are a few of the questions that can only be answered once the investigation from the SEC comes to an end. Until that happens, it will be best to make sure that we make out investments in it after good due diligence. It may also be advisable to ensure that the future it may have is judged based on the future that it may have. This industry has a long way to go from what we can see. The market looks good, the community is pretty supportive, and the people in it seem to be having a good time. The creators are being incentivized really well, the fee is being controlled, and the entire system has been proved sustainable. If you look at the reason why this concept grew at such a pace, the reason for that was the fast growth of the NFT and the prices at which these were being sold. The massive price tags these used to come at were extraordinarily high for the new investors to invest in these NFTs. As this concept came in, a lot more people were encouraged to make investments and retrieve the profits. Even though there are a few ambiguities in where the SEC stand, it was noticed that according to SEC Commissioner Hester Pierce, issuing fractional NFTs will be treated as investment contracts under securities law. This is very good news for the new concept that in a way declares FNFT to be completely legal. Partial ownership is not a new concept. It has been around for quite a while. It's just that such a new concept was being implemented in this field for the very first time. This is why many people have started exploring this field to make use of it and leverage all profits out of it while it is legal. That's all for today, everyone. Make a good profit and be the first one to invest in anything new. Of course, do conduct due diligence and do find out the pros and cons. If you have any doubts, check our channel out for the most accurate information. We will meet you again in the next video. Until then, hit the like button, subscribe to this channel, and comment below your favorite NFT.